On what to expect for the local market today. Stan Shamu joins us from IG in Melbourne. Stan, great to see you. Yeah, big rally continues there. What is it all about, not wanting to miss out on any potential further rally on the fiscal cliff deal?
Absolutely, it does seem that way. Of course, yesterday that's when we actually started seeing the Australian market come to life. For example, when news started trickling through from the US suggesting that President Obama had come up with a counter for John Boehner, and it certainly seems like he's happy to play ball at the moment. He's already reduced his revenue expectations from 1.4 trillion to 1.2 trillion, and at the same time raised the amount of income required for that tax hike from 250,000 to 400,000 a year. So it certainly seems like they've come they are trying to find some sort of middle ground. At the same time, we've had John Boehner talk to the other Republicans, and apparently he has come out of the meeting and he seems unscathed at the moment. So he might be about to table something to counter the proposal we heard from President Obama yesterday. So it does seem like there is a lot of optimism out there among investors. Of course, there isn't much time headed into the end of the year, but at the same time, everyone feels they will knock up some sort of a deal, and of course, a bipartisan deal will probably be the preferred outcome. And should this happen, we clearly could see the markets have a very good end to the year. Just looking at the other moves in the risk currency space, they weren't as consistent as what we saw in equities, which basically went straight up in Europe and the US. We did see the euro manage to break back above that 132 level to about 132.4, but the Aussie dollar continues to sort of lag the risk currency space. It's trading water, or sort of range bound around 153, I suppose, 1.053 that is, and that's probably because there is a lot of skepticism following the RBA's recent move. The minutes yesterday also suggested that they're not ruling out some sort of intervention to keep this Aussie dollar from affecting certain industries in the Australian economy, and at the same time they remain concerned about the mining sector, although we have seen them lead the recovery over the past few weeks. The yen continues to be weak. We saw the dollar yen push back above that 84. No one really wants to be a buyer of the yen heading into this BOJ meeting. We've heard Prime Minister Abe continue to ramp up talk of some sort of action by the BOJ, and with the meeting coming up, I think it's hard to be a yen bull at the moment. So chances are we will continue to see this weakness in most of the yen crosses.
Stan, got to ask you, because some of the commentators we've been speaking to are warning that we could see a bit of a sell the fact scenario happen here once the fiscal cliff is done, that there could be a pullback of, say, 2% on US equities, perhaps even a correction. What's your sort of thinking on that?
Yeah, absolutely, it does seem that way. Of course, at the moment we are pricing in a perfect outcome from the fiscal cliff negotiations. We have got markets all over the world breaking to new highs. We've got the Australian market breaking to a 15-month high almost every day. So it does seem like they're a bit extended at the moment. And if you do compare them to the moves we're seeing in the risk currency space, which is always a good measure of sentiment, it does seem like equities have overrun themselves a little bit. Most of the risk currencies were actually quite range bound right up till yesterday. So it does seem like that could be an issue heading into the beginning of next year, where maybe we would see a lot of investors look to lock in profits and get out of some of these overextended equities.
So what's the IG call then for the local market, at least today, for the open?
Well, we're actually looking at a very strong open now, gains of around 0.6% to 46, I think 26 the last time I checked. They might even have ticked a bit higher because I saw US equities having a bit of a go at the end of the session there. So we might be looking at about 46.30 by the time the market opens at 10 a.m. We are expecting yet another strong day for the miners. The BHP's ADR is pointing to a 0.4% gain to about 36.86, and that's basically basically on the back of that iron ore price, which remains very well bid. It managed to maintain its gains basically from the previous session, and it's still above that 132 level. So anything above 120 really is being seen as a bit of a kicker for the investment case for the iron ore miners. Unfortunately, with gold pulling back, we might see the materials being held back by some of the gold names like Newcrest, Medusa, Oceana Gold. They might continue to struggle on the back of that gold price. But at the same time, I mean, you have to look at the strength that some of these iron ore miners bring to the table. And with them continuing to break to new highs, we saw, I mean, Fortescue yesterday trading at about $4.50. So that might continue to give a bit of a kicker to the market. The banks were also doing quite well yesterday, and they might have continue to have a big run with this progress in the fiscal cliff negotiations. So yeah, no, absolutely, it does seem like the risk space will be in good stead again today, but we'll have to wait and see if we get any further comments from the US that might help fuel this rally further, or possibly maybe see the market stall and range a little bit until we get something a bit more definitive.
Stan, appreciate that. Thank you so much.
Cheers, Ray.